Namaskar, this is the Economic Brief, a weekly program with an eye on news related to the economic big picture, gazing out from Indian shores. On the show, India's Q3 FY26 economic surge, consumption climbs, GST collections hit 1.96 lakh crore rupees, a 5-month high. Debt, which created the banking system way back when, is now expected to be 100% of global GDP by 2029, says the IMF. The US shutdown, now the longest in the country's history, and politics trumps economics as the standoff tests the US economy. And Zoran Mamdani is elected as the NYC mayor. The 34-year-old Democrat vows bold affordability agenda amid voter shift towards socialism. Before we move on, let's listen to the Commerce and Industry Minister of India, Piyush Goyal. He speaks about the aspirations of Indians, especially in trade negotiations. Here, he is speaking in the context of trade negotiations with New Zealand. There are about 300,000 people of Indian origin in New Zealand.
As we desire our economy to grow, our people to have a better quality of life, a better future for their children, I think friendship and trade and partnership with countries like New Zealand will help our people aspire big, will help our people meet the needs of New Zealand, as well as provide opportunities for our people in terms of business, jobs, capability to learn about better and higher productivity farming back home in India. So we've been trying to, in this trade negotiation, go beyond the traditional tariff negotiations or reduction in tariff to newer ways to expand this relationship.
And now let's take a look at how the Indian economy is, moving in strong momentum in Q3 of FY26. It's a strong start to Q3 because there has been rising consumption as well as production. And we can see that GST collections have hit, as I was mentioning, 1.96 lakh crore rupees, which is a 5-month high. It's near 2 lakh crore rupees mark. And what are we seeing? This is a sign of rural recovery. Private consumption and investment is also up. And we can see that growth should pick up based on this kind of data. Moving on to our next slide. So this is the HSB manufacturing PMI. It's at 59.2 in October. The PMI, anything above 50, is a sign of expansion. And the PMI averaged about 59 for about 5 months in 2025. And this is driven by domestic demand and GST rate cuts. So 59.2 is showing robust growth. Robust growth in production. What does that imply? Manufacturing is growing because perhaps costs have come down. Cost of production, and there's a lot of optimism in the manufacturing sector. So producers are putting in their money to see that they can increase supply. Moving on to our next slide. And we can see that demand has also been good, and we can see here in the auto sector, Maruti Suzuki has seen the highest ever October sales. Mahindra Mahindra has seen a plus 31% in their dispatches. Tata Motors a plus 27% in domestic sales. Huge amount of increase in the domestic consumption, in the demand. Our next sector, we look at some of the, our next slide please. We are looking here at the commercial vehicle segment. TVS again, plus 8% in domestic sales. Bajaj Auto, similar. So we're talking about two-wheelers. And now we're talking about also about commercial vehicles of Tata Motors, about 7% plus. Mahindra commercial vehicles of about 14%. And escorts, we can see that tractors have also done very well. 3% plus in rural recovery signs. Rural recovery signs are important because it shows widespread demand. How do we gauge this? We can also see that the UPI transactions are up 25% in October, over 200 billion. So we know that the UPI transactions have increased by 10x in volume since 2018. It's a huge increase and rapid increase. So it clearly implies that there is deep financial inclusion and also access to technology. So it's technology-driven efficiency. And credit card e-commerce is also up by around 58%. So people are also optimistic about their earnings and they are buying for the future. Moving on to our next slide. So there is some area of concern because we can see that Coal India's output is down about 9.8% in October. So mining sector is being impacted, and this is impacted by post-monsoon disruptions. That's one of the analysts and what their take is on the issue. So there is some sort of lag in the mining sector. Let's move on to our concluding slide, and here we look at the GDP outlook. The GDP growth outlook for Q1 was about 7.8%. It was the fastest in 5 quarters, but the RBI is projecting about 7% growth in Q2, and that would ease to around 6.2% in Q4, and it's going to be sub 6.5% growth expected for the second half of FY26. So we can see there is a slowdown in a sense in growth to some extent. So later in the program, we're going to be focusing on Zoran Mamdani's victory in the New York mayor election. But during his victory speech, he talked about a change and also affordability. He talked about freezing rents, improving public transport. Let's listen.
New York, tonight you have delivered a mandate for change. A mandate for a new kind of politics. A mandate for a city we can afford. And a mandate for a government that delivers exactly that. Together, New York, we're going to freeze the... Together, New York, we're going to make buses fast and... Together, New York, we're going to deliver universal...
And joining us to help us unpack these stories, what I was talking about a little bit, we have Dr. Nilanjan Banik, Professor of Economics at Mahindra University. Thank you very much, Professor Banik. Now, momentum seems to be up, as I was saying, but still cautious in growth projections. Why are we expecting H2 to deliver sub 6.5% growth when we are looking at all the indicators seeming to be robust?
So, Mark, there are a few headwinds as well as tailwinds. You have already mentioned that when you're looking into some macro numbers in terms of GST tax collection, in terms of manufacturing PMI, these are indicating that the economy is doing well. If you talk about major automobile manufacturers, major electronic product manufacturers, all are seeing an uptick in economic activities recorded in terms of their sales figure. Now, I would like to go 8 or 10 years back because you also mentioned about the rural demand. That is one of the reasons why this is happening. Now, if I look into the Indian economy, a major portion of the demand is driven by the rural sector because we have around 400 million people who are earning their livelihood from the agricultural and allied activities. You also have another important sector, which is the small and marginal enterprises, and you have around 120 million people earning their livelihood from the MSME sector. Now, what has happened since the start of the reform process, in particular with the introduction of GST way back in 2017, and also the digitization that we are seeing all around us, this has actually enabled people to do more business. Let me explain, because you also mentioned about the way the UPI payment, it is increasing by leaps and bounds. Now, if you look into the the commercial activities which are backed by the UPI type
Yes.
payment system, it is explaining close to 55% of our national income.
Right.
Now, what that has done for the MSME sectors, it is actually creating the books of account, which earlier was not there, because of which some of the MSME sector which were earlier not given access to formal credit, because
Yes.
now their book of account has got created, they are now getting access to formal credit system. And if I look into the data, you will find that the MSME loan to the MSME sector is increasing by almost 35% annually. Now,
Okay.
that is a big thing. And you have also mentioned that the cost of doing business is coming down. Just to again give you an example, before the introduction of GST, you would see all the trucks being stationed in the state borders almost for 12 to 14 hours. Now, because we have a uniform tax structure in place, those kind of delay because of clearing the state level tax system, which was
Right.
before GST, it was different for different states. That thing has
Okay.
gone away, and
Indeed.
because of that, the cost of doing business has also come down. So not only the MSME sector, but also for the business in general, the cost of doing business has actually gone down, and it has come down considerably.
Okay.
And in addition to that, if I were to look into the agricultural sector, you will
Yes.
find during early part of 2000, agricultural sector was going around, the long-term average was around 2 to 3%. But
Okay.
now if I look into the last 5 years, you will find agricultural sector is growing at a rate which is in excess of 4.5%,
Indeed.
which is happening again because of technology, because of government initiative like drone Didi program, where we are actually using drone trying to figure out which type of crop is suitable for what type of soil, or for that matter, the
Yes,
government.
yes, indeed. So let me ask you another question about the big picture in terms of you talked about manufacturing. Our manufacturing is increasing, but as countries build self-reliance and resilience for supply chains, how is that changing the old theory of comparative advantage in international trade? Because now we are producing almost everything.
Yeah, we are producing almost everything, but a major part of the inputs that crosses the national boundary many times. For
Okay.
instance, if I'm talking about the simple Apple iPhone, which is manufactured in the plant in Tamil Nadu, it actually crosses the national boundary almost 40 to 50 times, because one of the chips get implanted here, then the product has to again go to Malaysia,
Right.
again it come back to India, again go to China, things like that. So the supply chain in this globalized economy is very much there, and therefore the trade is very much important. Now, some of the reason why we find, although the tailwinds are very good in terms of demography, in terms of more people getting access to doing business, like the MSME sector I mentioned,
Yes.
like also the government is investing many much more money towards infrastructure, which is again bringing down the cost of doing business. But if I look into the headwinds in terms of the external economy, in
Okay.
particular, because of war, because of other
Right.
slowing growth process in Europe and US, as well as in China, we are finding increasingly the trading partners are becoming protectionist in nature.
Sure.
And that is kind of causing some kind of
Dr.
headwinds, which is.
Banik, we'll talk a little bit more about the headwinds because we're going to talk about debt now, and I'll come back to you for that. The International Monetary Fund has sounded the alarm on global debt, projecting that it could soar to 100% of GDP by 2029, up from about 83% in 2019. Now, this surge threatens long-term fiscal stability, especially as major economies like the United States grapple with inflation, slowing growth, and the disruptive impact of AI-driven market valuations. So let's look at this report. The IMF's fiscal monitor warns global debt could hit 100% of GDP by 2029, up from 83% in 2019. and may reach 123% in a high-risk scenario threatening long-term fiscal stability. Currently, the world's largest economy, the US, is adjusting to a recent AI investment surge, which has pushed up market valuations of US companies like Nvidia. But the US deals with plenty of uncertainty.
And so here I want to flag that if you're comparing where we are with the US economy to a year ago, October 24, we're seeing less growth and more inflation. So the signs of, if you want, a negative supply shock. That's how we would describe it in our lingo.
The IMF urges lasting fiscal reforms to stabilize debt, advising low-revenue nations to boost taxes and efficiency. In 2025, China holds $756 billion in US debt, about 2.1% of the $37 trillion national debt total. The Federal Reserve owning most of the debt, thus making it largely manageable.
We are concerned that the ability of the Chinese economy to continue growing out of the external sector in an environment that is becoming very, very complicated is not guaranteed. So the Chinese economy, our diagnosis remains the same. There needs to be a pivot from an externally driven engine of growth to a domestic driven one.
Debt is not all bad. It supports growth, stability, and flexibility. Governments borrow to fund services and boost productivity. Low interest rates make borrowing cheaper than repayment, as seen in the US and Japan. Despite having a debt to GDP ratio near 250%, Japan maintains debt due to low interest rates and domestic ownership of its bonds. Sovereign debt is easier to manage than private debt, since the creditors can't seize government property. Repaying all debt could cut public support, slow innovation, and hurt startups, stifling growth unless offset by smart policies. The Economic Brief, DD India. And let's talk to Professor Banik once again about debt in general. Professor Banik, is debt even, at 100% a problem? Because it's not like it's ever going to be paid back. And there may be a time also in the future when interest rates are so low that evergreening will be quite manageable.
Yeah, it depends upon where you are using the debt. Now, if you look at the world at this point of time, if I look into US, the debt as a percentage of GDP is almost 140%. China, the debt is almost 115% of GDP. Same for Japan, France, Germany, UK, all these economies. Now, if you look into the factors which are contributing to the piling of debt, it has to do more with not so productive type of investment. It all started with COVID when countries around the world, there was a necessity for fiscal incentive just to prop up the economy, and the debt started piling up since then. After COVID, you also have things like the war,
Yes.
Russia-Ukraine war, you have the war in the Middle East, and the war is costly in the sense that it actually increases the price of universal input, which can be in the form of vegetable oil that we take for our food,
Right.
or in the form of petrol and diesel. The third thing, and which is very important, is if I look into the demography as a factor for most of the European economy, as well as for China and to some extent for the US,
Right.
you will find that the working age population, they are actually have retired. And this is particularly true for Western Europe and the Japanese and the South Korean economy. Okay. What does that mean? Because they have a strong trade union in place, you have a big portion of the working age population who are now not working, they are actually laying their hand on the pension system.
Yes.
Now, you have a scenario where people are not working,
Yes.
but you have to give subsidies in the form of pension and other doles.
Right.
And
Professor Banik, we are running short of time, so let me just fit in another question. Look at India. Should India be looking at, to fund its infrastructure mainly through debt, because we're talking about Viksit Bharat by 2047? Currently, our debt to GDP ratio is only about 83%, and it's projected to remain stable.
Yeah. So in India, as you mentioned, given the other numbers which I've just now spoken, 83 looks very nice. And the moment you mentioned that India is investing, the capital expenditure is towards what we call productive investment, because you're building road, ports, and the multiplier effect of this, the back of the envelope calculation shows it is around 2.5, because 60% of our demand is driven by consumption. So if I look into the marginal propensity to consume as 0.6, it implies that the multiplier effect is almost 2.5, which means if the government, or for that matter, 100 rupees is being spent,
Yes.
it ends up creating almost 250 rupees of income. And the good thing about India is our demography, because the
Yes.
median age is only 28, as opposed to other countries which I mentioned, where because of the higher their retiring age population, they have to spend more money on to so-called pension type activities, which are not that productive. So looking into that lens, I think in
Yes.
India we have big hope, and the economy will continue to sustain the present growth
We'll have to
momentum.
leave it there. Thank you very much, Professor Banik. Thank you for joining us and helping us understand these stories in greater detail.
Thank
Now,
you.
moving on to our next story, America's longest ever government shutdown is now stretching into its 6th week, and the economic consequences are beginning to bite, from stalled welfare programs to unpaid federal workers and disrupted air travel. The standoff in Washington is testing the limits of the U.S. economy and political patience alike. Diptanshu Kashyap breaks it down.
The United States has entered the 6th week of the longest government shutdown in its history, surpassing the 35-day record for Donald Trump's first term. Federal agencies have gone unfunded since the 1st of October, leaving 1.4 million workers, from air traffic controllers to park wardens, either furloughed or working without pay. The deadlock stems from a dispute over healthcare spending. Democrats are pushing to extend insurance subsidies, which help millions afford coverage, while Republicans insist the issue can only be addressed once the government reopens.
We will sit down with any Republican who is prepared in good faith to find a bipartisan path forward to reopening the government, to entering into a spending agreement that actually makes life better for the American people, not worse, and that decisively addresses the Republican healthcare crisis.
The economic cost continues to climb. The Congressional Budget Office estimates potential losses of up to $14 billion if the shutdown extends to 8 weeks. More than 60,000 air traffic controllers and TSA officers are working without pay, heightening fears of mass flight cancellations and possible airspace closures as staff shortages worsen. The White House has warned that delays in food assistance could affect over 42 million Americans, deepening hardships for already vulnerable communities. President Donald Trump, meanwhile, has sought to turn up the pressure on Democrats, threatening large-scale federal layoffs and leveraging the shutdown to challenge key progressive spending priorities. Even as courts block attempts to suspend key welfare programs, the Republican-controlled Senate has failed 14 times to pass a temporary funding bill, keeping critical services from aviation to healthcare and food aid in partial shutdown.
The entire country is calling and waiting on just 5 more Senate Democrats to come to their senses and do the right thing. We are pleading with them to do so. This is not a game. The solution is sitting right in front of them. Pass the clean CR, end this madness, and open the government.
As both parties trade blame, the fallout is deepening economically, socially, and politically. Welfare programs remain in limbo, federal workers brace for another unpaid cycle, and the travel industry faces disruptions ahead of Thanksgiving. The shutdown has evolved from a budget impasse into a broader test of resilience, of how long the world's largest economy can function with its government on pause. Diptanshu Kashyap's report for the Economic Brief, DD India.
And New York City is preparing for a political and economic reset. The mayor-elect Zoran Mamdani has unveiled his transition team, promising to tackle the city's cost of living crisis and rebuild public trust in government. From housing affordability to poverty reduction, Mamdani says his administration will focus on delivering the working class New Yorkers. He's going to deliver for them. Diptanshu Kashyap explains. We'll leave you with his report. Thank you very much for watching the Economic Brief. See you again next week. Namaskar.
New York has elected Zoran Mamdani as its next mayor, a 34-year-old Democrat whose campaign centered on tackling the city's soaring cost of living. His victory marks a sharp political shift, with voters backing his call for a fairer, more inclusive economy. As he prepares to take office in January, the self-described socialist faces the challenges of translating his affordability agenda into action for one of the world's most complex urban economies.
New York will remain a city of immigrants, a city built by immigrants, powered by immigrants, and as of tonight, led by an immigrant.
Mamdani's economic agenda focuses on making New York affordable again. His proposals include a 4-year rent freeze on 1 million rent-stabilized apartments, free public buses, and a network of city-owned grocery stores offering cheaper essentials. He also plans to raise the corporate tax rates from 7.25% to 11.5% and add a 2% tax on incomes above $1 million. He also wants to expand childcare access and lift the city's minimum wage from $16.50 to $30 an hour by 2030. Steps, he says, are key to rebuilding an economy that works for working families. Mamdani's victory not only marks a generational and ideological shift in New York politics, but also sets up tough tests ahead. Economists warn that rent freeze could be catastrophic for building owners, while others question the cost of his free bus plan and steep minimum wage hike. Critics also argue that he lacks the experience to manage a city of New York's scale, yet Mamdani remains defiant.
So Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Gitanshu Kashyap's report for DD India.